Welcome. Today we unpack a common but stressful situation, a lost return package, and a company that suddenly emails you promising a full refund, only for the money to never arrive. We will examine whether that written email can help you win a chargeback, how to time your dispute, what evidence matters most, and how liability shifts when insured returns or carrier claims are involved. Let's move step by step so you can feel confident and prepared. First, we will outline the scenario and the policy contradiction many consumers face. Next, we will explain why written promises can outweigh strict policies in disputes. Then, we will walk through a flowchart of the promise to dispute journey, followed by a practical action plan. After that, we will review key deadlines, compare liability under policy versus written promise, and map out the ideal evidence package. Finally, we will test your understanding with a short quiz, address edge cases and common mistakes, and close with a brief disclaimer and the main takeaways. To set the scene, imagine you return a rented or high-value product. The package is insured, but it gets lost in transit. The retailer's policy says no refunds if the return is lost. Suddenly the company emails you promising a full credit, even giving a processing timeline. Days pass, and nothing posts to your account. You are stuck between the strict policy and a seemingly official written promise. This conflicting situation is more common than you think. Now that the scenario is clear, let's contrast policy and practice. Many merchants have strict rules denying refunds for lost return packages. However, it is not unusual for a representative to send an email granting a full credit within a specific time frame. That email creates a contradiction between the stated policy and what the merchant committed to in writing. If the credit never posts, that email becomes your strongest piece of evidence. In chargeback reviews, clear written communications can carry significant weight, sometimes more than the original policy fine print. Let's visualize the path. First, the merchant sends a written refund promise with a clear amount and timelines. Next, you wait through the full processing window plus a few extra banking days. If the credit posts, the process ends. If no credit appears, you gather evidence: the email promise, order details, a screenshot of the policy, shipping and tracking information, and a dated timeline. Then you file a chargeback using the reason category for non-receipt of a promised credit. The bank compares the merchant's terms with the written promise. Outcomes vary. A provisional or favorable decision credits you. Sometimes the bank requests more documentation. If initially denied, you may appeal by providing stronger evidence. This flow helps you act in sequence and avoid premature filing. Here is the bottom line. Written confirmation is often decisive. Card networks and issuers recognize disputes for non-receipt of a promised credit. The email provides reason to believe the refund should have been posted. When communications are clear, dated, and specific, they frequently outweigh generic policy language. To strengthen your position, preserve the full email including headers and timestamps, and highlight the exact amount and timeline that were promised. To act effectively, first wait the full promised processing window and add a few banking days for delays. Meanwhile, document everything, including the promise email, the merchant's policy page, your order and return identifiers, tracking details, and a simple dated timeline of events. Next, confirm your bank's dispute deadlines. Many issuers give around 60 days from the statement date. When filing, choose the non-receipt of promised credit category and attach strong evidence, such as the complete email with headers, a concise timeline, a screenshot of the relevant policy, and any tracking data. After filing, monitor for provisional credits and respond promptly to any requests for more information. If necessary, escalate or appeal with clearer annotations and any additional communications from the merchant. These timelines are examples, not guarantees. Many issuers allow about 60 days from the statement date to dispute, but you must confirm your exact window. Regardless, wait through the promised credit timeline plus several banking days before filing. Policies differ by issuer and jurisdiction, so verify details with your bank. On one side, the merchant's policy often states that customers bear the risk of lost insured returns and must pursue the carrier for reimbursement, implying no refund from the merchant. On the other side, a written credit promise sets a clear expectation that the merchant will issue a refund. In a chargeback review, that explicit commitment frequently carries more weight than generic policy language, especially when it specifies the amount and timing. This mind map shows your ideal evidence bundle. Start with the email promise, including the exact amount, timeline, sender, date, and headers. Add order and return details such as order number, RMA, item description, and value. Include a screenshot of the refund policy, especially the lost return clause. Provide shipping and tracking information, including carrier, tracking history, and any loss status indicators or insurance details. Maintain a timeline log of key dates: when you ordered, returned the item, received the promise, the expected post date, and follow-ups. Keep communication logs with names and dates for calls or chats. Finally, add proof of payment, such as the last 4 digits of the card and the statement entry. Next, here is a practical checklist formatted for clarity. Save the complete refund email with headers and timestamps. Take a screenshot of the policy concerning lost returns and refunds. Gather order and return identifiers, item details, and the item's value. Export the tracking history that indicates the loss or non-delivery. Write a dated timeline of the key events. Prepare a concise cover note that explicitly connects your evidence to the non-receipt of promised credit reason. For example, quote the promised date, amount, and timeline, and state the date by which the credit should have posted but did not. To understand pacing, follow this timeline. On day 0, you receive the refund email promising an $800 credit within 2 to 3 business days. By days 3 to 5, the promised window ends. Between days 6 and 8, allow for extra banking days. If the credit still has not posted by roughly days 9 to 14, you are positioned to file a dispute under the non-receipt of promised credit category. Between days 15 and 30, you may see a provisional credit while the bank investigates. Finally, the investigation typically concludes within 30 to 90 days, depending on the issuer and complexity. Quiz time. Here is the question. A merchant emails you promising an $800 refund in 2 to 3 business days, but no credit posts after you wait additional banking days. Which dispute category best fits your case? The options are 1. Non-receipt of a promised credit. 2. Merchandise not received. 3. Defective or not as described. 4. Friendly fraud. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is non-receipt of a promised credit. Because the merchant explicitly promised a refund with a defined amount and timeline, this category most accurately matches the situation and is supported by specific dispute reason codes. There are several edge cases to anticipate. If the merchant offers store credit instead of the card refund that was promised, that may not satisfy the commitment. Or partial credits specify the remaining amount owed. If the merchant claims the credit posted to a different account, provide your statement as proof that nothing posted to your card. With international merchants, the exact timelines and reason codes can vary. If the payment was via ACH or certain debit networks, protections can differ from credit cards. For lost insured mail, the party who bought the label typically has the right to the carrier insurance payout, which can complicate liability. Finally, even if the merchant claims the email was sent in error, the written promise still carries significant evidentiary weight. To improve your chances, do not file before the promised window expires. Avoid relying solely on phone calls. Always secure written records when submitting evidence. Ensure screenshots display dates, headers, and the agreed amounts. Track your issuer's dispute deadlines carefully. Do not threaten chargebacks prematurely. Gather strong documentation first, and make sure to label the dispute correctly as a non-receipt of promised credit issue so reviewers immediately grasp the context. Before we wrap up, a brief disclaimer. This content is educational and not legal, financial, or consumer rights advice. Card network rules, issuer policies, merchant terms, and local laws vary. You should confirm details directly with your bank and consider consulting a qualified professional for guidance tailored to your circumstances. To recap, a written refund email can be decisive, even when a merchant's policy appears to forbid refunds. Wait until the promised window plus a few banking days has passed before disputing. File under non-receipt of a promised credit and attach complete, well-labeled documentation. Track your deadlines, as many issuers allow roughly 60 days from the statement date. Remember that for lost insured returns, whoever bought the label typically handles the carrier claim. Keep all communications professional, clear, and well documented. Thanks for watching. If you found this helpful, please like, share, and subscribe. In the comments, Share your experience with refund promises and disputes. Your stories help others learn what works.